President Trump just announced the most aggressive housing market intervention since 2008 with the goal to make housing more affordable again. These proposals include cutting funding for housing subsidies, creating programs to boost housing construction, and potentially even declaring a national housing market emergency. The goal is to make housing more affordable. But of course it comes with a risk that maybe it can make housing even more expensive. So if you own a house or if you're thinking about buying a house, make sure you watch this video until the end to get an understanding of what's happening and what might be happening. The United States of America is facing a housing market affordability problem. And the best way to understand what's going on is to understand how the housing market has shifted over the last 50 years. So let's start by taking a look at household income from 1975 to 2015 to 2025, and we can compare that to the cost of owning a house. The median household income in 1975 was about $12,000 a year. By 2015, it jumped up to $56,000, and in 2025, it's expected to be around $85,000 rounding up. Now let's compare that to the cost of housing, because in 1975, the median house in America was selling for $38,000, which means it was about 3 times the median household income. By 2015, the median house in America was selling for $290,000, which meant it was about 5.3 times the median household income to purchase that median house. And at the time we're recording this video in 2025, the median house in America is selling for around $410,000, which is approximately 4.8 times the median household income, which has people scratching their heads. Wait, this looks like housing is more affordable in 2025 than 2015, but it definitely does not feel that way, and that's because you have to take it one layer deeper. In 1975, if you bought this $38,000 house and you got a mortgage, you'd be paying 9% a year on your mortgage, and your monthly mortgage payment will be $245 a month, which means that your mortgage payment will be about 24% of your household income. In 2015, if you bought this $290,000 house, you can get a 30-year fixed rate mortgage for a little bit under 4% a year, which means your monthly mortgage payment would have been $1,240 a month, which is again about 24% of your monthly household income. And by the way, these are pre-tax numbers. And now here we are in 2025. If you want to buy that $410,000 house, you might be paying 6.5% on your 30-year fixed rate mortgage, which means your monthly cost on this house is now going to be $2,500 a month. And this is now about 36% of your monthly household income pre-tax. This is where the affordability problem can really be seen, because now you have to pay a bigger chunk of your income in order to pay for that same house. Now, as somebody who's just a random guy on YouTube, I can tell you that if you want to make housing more affordable, there's really only a few things that you can mess with. Number 1 is housing prices. Number 2 are mortgage rates. And number 3 are incomes. If you reduce housing prices, if housing prices fall, well, yes, housing becomes more affordable, but there's a price, because if housing prices fall, now people are going to be underwater on their houses. If people are underwater on their houses, you're going to see more foreclosures. If you have more foreclosures, you could see a repeat of the 2008 crash, because people were underwater in the houses and didn't feel the need to keep making their mortgage payments. Number 2 is you can make mortgages cheaper. If we go from a 6.5% mortgage that we have now to a 4% mortgage, it is going to make your monthly cost of ownership much cheaper. But you also risk then housing prices going up even more, because if mortgage rates fell to 4% tomorrow, chances are a lot of people would want to go out and buy a house tomorrow, and that could create more bidding wars on houses, which could push home prices up even more, which then makes housing less affordable. And then option number 3 is incomes could go up, because if incomes go up and housing costs stay the same, well, now housing starts to become more affordable. This is that dilemma that's going on in the housing market right now, where there's no clear path to make housing more affordable, but the Trump administration has 5 proposals that they're working on to try to make housing more affordable for the American people. So let's break that down, and this is where I want to remind you, it is very important for you to be financially savvy and be an investor, that we can capitalize on any changes that happen in the economy. And for those of you that are investors or want to become investors, I have a new free investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. And I'll show you the exact system and framework that my firm uses to research investment opportunities and find opportunities before they hit the headlines. It's a free masterclass, and if you register for the masterclass, you're also going to get access to Market Briefs, which is my newsletter for investors, for free as a complimentary bonus. So if you want to get the investing masterclass and Market Briefs all for free, all you have to do is register for free, and I have that link for you down in the description below. So let's get into the 5 proposals created by President Trump to make housing more affordable, starting with number 1, boost housing construction by leaning on Freddie Mac and Fannie Mae. The price of your house is not what a realtor says it's worth. It's not what Zillow says it's worth, and it's not what the government says it's worth. It's worth what somebody else is willing to pay for it, and ultimately the price of the house is going to depend on supply and demand. If you have a lot of buyers, meaning more demand than there are sellers, well, now the buyers are going to bid against each other for the house, and that pushes home prices up. On the flip side, when you have more sellers, more supply than you do buyers, everybody's competing against each other to sell their house. So now the way you compete is by cutting the price of a house. So when you have more supply than demand, housing prices generally go down. And what President Trump says is that home builders right now are sitting on 2 million vacant lots right now that they're not building, which is the largest amount ever. So what does it have to do with Fannie Mae and Freddie Mac? Fannie Mae and Freddie Mac are private companies, but they are GSEs, meaning they're government-sponsored enterprises. Essentially meaning they're private companies, but they have the financial backing of the United States government behind them. And what they do is they are the ones that are buying loans from lenders. So if you go to a bank and you get a 30-year fixed-rate mortgage, the bank doesn't want to wait 30 years to get their money back. And if they had to, well, they'd probably be issuing a whole lot less loans. And if the bank was the one that was liable for the loans, or you paying or not paying, they'd probably be a lot more strict on who they issue loans to. So to help resolve that, Fannie Mae and Freddie Mac buy the loans from banks and lenders out there. That way banks and lenders can issue you a loan and then sell that loan to Fannie Mae and Freddie Mac, and then go and sell another loan and another loan, which allows lenders to issue more loans and potentially issue loans that they normally wouldn't, because they don't have to worry about you paying back the loan as much as if they kept that loan on their books. So Fannie Mae and Freddie Mac are buying loans from banks, and then they package them together into something called an MBS, a mortgage-backed security, and then they sell them off to other investors. Now the reason why Fannie Mae and Freddie Mac can impact the housing market is because they're purchasing something like 60 to 70% of all loans that are issued. So if Fannie Mae and Freddie Mac change their policies on which loans they're going to purchase from banks, then banks are ultimately going to change which loans they issue out to you. So if Fannie Mae and Freddie Mac say, you know what, we're now going to start purchasing loans from more risky borrowers, from people that have lower incomes, people that have bad credit ratings, well, then the lenders are going to say, oh, well, then we can start selling those loans, because the lenders are really just brokers. They're the ones that are selling the 30-year mortgages. And if they can sell that loan to a buyer, which in this case is Fannie Mae and Freddie Mac, then they will probably do that. And this is where President Trump is pushing Fannie Mae and Freddie Mac to maybe start going out and buying more construction loans. That way banks are more likely to issue those construction loans. Maybe President Trump is saying that Fannie Mae and Freddie Mac can be more aggressive to purchase affordable housing loans. Because if developers can get easier access to loans that will allow them to build more affordable housing construction with more favorable terms, then maybe they'll be going out and doing it. Or maybe President Trump is pushing Fannie Mae and Freddie Mac to accept and purchase loans from buyers who are less qualified, people who have less income, people with worse credit scores. Because if those people can qualify for a mortgage easier, and banks are willing to lend those loans because Fannie Mae and Freddie Mac are going to buy them, well, that can also impact demand, because then the people that would normally not be able to purchase a house, well, now suddenly can qualify. Could this help the housing market? Yes, it could help increase construction. Yes, it could help increase loans and purchasing, but it also has a risk, because you don't want everybody to own a home. We learned that lesson in the 2005-2007 time, because a lot of people were purchasing houses who shouldn't have. People who shouldn't have qualified for a house, because when people don't have the income or the ability to pay back the mortgage, and you think that you buy the house and you're going to build wealth, well, sometimes that can backfire. So we don't know what direction Fannie Mae and Freddie Mac are going to go, but we know that there's pressure by the White House to encourage Fannie Mae and Freddie Mac to potentially be more aggressive in which loans that they're purchasing from lenders. Number 2 is the federal government selling off public land. Again, the price of a house depends on supply and demand. And so what the Trump administration is saying is, if we sell off some of this public land, we can create more supply of houses, because now there's more area, more real estate for developers to build their properties on. And that could help increase supply, which could potentially lower the prices of houses, assuming that the inventory, the supply of houses, go up. Proposal number 3 is for the government to cut funding and aid for housing assistance and housing subsidies. There are certain government programs out there that are designed to help certain low-income people qualify or get into a house or a rental property. That could be through funding from the government. Some of these things include things like Section 8. What Section 8 is the government is helping to subsidize that tenant's rent. And what the President and White House is saying is, if we reduce that funding, it will lower some of the burden for the United States government. but that can also have an impact on the housing market, because if those people cannot qualify for certain houses, well then that can decrease the demand for certain houses, which obviously has an impact emotionally, but also financially, because if there's less demand on a house, well then the house price can also come down. Number 4, there's a push by the White House to be able to use crypto on your mortgage applications. Right now, let's say you have a couple $100,000 sitting in your Bitcoin wallet or your crypto wallet. It's hard to declare that on most mortgage applications, but there's a chance that could be changing. Read this. The Federal Housing Finance Agency has issued a directive ordering Fannie Mae and Freddie Mac to formally consider cryptocurrency as an asset in single-family mortgage loan risk assessments. And number 5 is declaring a national housing emergency, because in September, the Trump administration floated around the idea of declaring a national housing emergency potentially sometime this fall. If that happens, it would be the first time that we see a national housing emergency since the 2008 financial crisis. Now, what a national housing emergency means is it allows the president to pass certain rules or regulations in housing without having to go through Congress to expedite these changes. What are those changes? Well, there's a lot of potential. We don't know for sure, but here are a few ideas. Number 1, this could be done to change permitting policies to potentially make it easier for builders to start building construction. Number 2, it could be done to release some of the federal land for housing, that way the government sells it off. Number 3, the president could create new tariff exemptions for materials for housing, because we know that the United States imports certain housing materials like lumber, and if lumber has a tariff, well, that makes housing more expensive. But if you pass an exemption, well, that means that construction workers and companies and developers could import certain construction materials without paying that tariff. Number 4 is changing FHA rules to either make it more difficult to qualify for a mortgage, or maybe easier to qualify for a mortgage, depending on how the government wants to influence demand to impact the housing market. Number 5 is creating or passing some closing cost subsidies. Buying a house is expensive, and if the government were to pass some sort of program to subsidize their closing costs, that could potentially make it cheaper for people to buy a house and maybe encourage some more people to buy a house. Or potentially number 6, creating new financing incentives to encourage people to go out and get a mortgage. Again, all of these things are just theories. We don't know exactly what the government would do, but we know that if a national housing emergency is declared, that would allow the president to go out and pass new rules related to the housing market to encourage people to either buy more houses or build more houses. And depending on if the government wants to influence supply or demand, that can help influence which things they ultimately pass. So what we know is happening right now is that the United States is facing one of the most unaffordable housing markets that we have seen in history, because we've seen throughout time that yes, household income has grown along with the median price of a house, but the cost of home ownership has been growing significantly, because now people have to pay a bigger chunk of their income to be able to afford a house, more than we've seen happen in the past. And this is where really it's a tricky balance, because if you cut the prices of houses, well, that makes people underwater on their houses. That has a cost. If you reduce mortgage costs, that makes housing more affordable, but it can also cause housing prices to go back up even more. The real way to make housing more affordable is if housing costs stay the same and incomes are growing faster than housing costs, but there's a whole nother economic agenda for that to actually happen. And this is where the Trump administration has talked about 5 different proposals to try to make housing more affordable, starting with working with Fannie Mae and Freddie Mac to encourage more building. Number 2, selling off some public land so there can be more supply of land for developers to build on. Number 3 is to cut housing aid as a way to reduce costs for the government and potentially decrease demand for houses. Number 4 is to make crypto available on mortgage applications. So if you have crypto, you can use that to qualify for a mortgage. And number 5, potentially declaring a national housing emergency. A lot of big things. We'll see how things pan out over the next 6 months. I'll be working to keep you posted on this channel. Again, this is why it is so important for you to stay up to date on what's happening, but also for you to be an investor, that we can capitalize on changes that are happening in the economy. If you want some more resources, I have a free investing masterclass for you in the description. And if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor to help spread this financial education. Thank you. Russia accused the United States of trying to devalue its $37 trillion of national debt without informing the American people. How? By using stable coins, crypto, and gold. So if you hold dollars or stable coins or have a retirement fund, you want to pay attention. Why does Russia care that the United States government has $37 trillion worth of national debt?